All right, so here is the indirect method from the other information fully. It starts with the accrual based net income. It makes two types of adjustments to arrive at cash flows, adjustments to the net income. You see the impact cash and changes current liabilities and current assets. So we're going to start here again, depreciation. We're going to start with that every single time. We're going to add it back because it's a non cash entry. Then we're going to look for loss or gains. We have any kinds of loss or gains or losses from sale of our assets. That's done every single time, and it's the opposite of the two. So if you have a loss, you add it back. If you have a gain, you subtract it. I'm wanting to act as if those entries and those gains and losses didn't happen. I'm zeroing them out by doing this, and then I get to take off running with the analysis of these accounts. So this is my net cash provided from operating activities. My operating activities is $20,000. So then I can go through and look at my investing and financing sections now. All right. Y'all can look at these slides too. And it tries it. I've never found just looking at this and trying to memorize this helpful. Okay. Y'all may, but I've never tried to say, okay, if you increase this, you can subtract it. If you decrease this, you can add it. I wanted to understand what was happening because then I knew it as opposed to trying to memorize this. To me, there's no just good way to memorize this. You have to understand, okay, well, if my receivable went down, means I collected money from a previous period. That means I get to add it back. Okay, that's my thought process. And if my payables go up, means that I have expense on my books that I didn't pay for. It means my cash flow also went up. Okay, that's how my thought process works on it. Or if my payables went down from one year to the next, means that I took this year's money and paid off last year's bills. I wanted to get to the adjustments here for these financing activities. All right, so here is from investing on the first step about these gains or losses. This is what the entry I was talking about with your gains and losses. This is why we do this to start with. So it says analysis reveals all right, a $40,000 increase. And see, this is a purely educational exercise for you guys. All right. This is, you're never not going to have this entry just be able to pull it up to start with. You'd have made it 4 months ago. You know, when you're doing this at the year end, we're already going to have this, but this is what we're going to have to analyze when we do this on the homework. Okay. It says the analysis reveals a $40,000 increase in plant assets from 210 to 250 and a $12,000 increase in accumulated depreciation from 48 to 60. So that may not be the only thing that happened. Okay, so don't just get caught in saying, okay, well, I got 40,000 in new, 40,000 in new assets, and that's all. I mean, I could have had a situation where I sold something, right? Because I'm showing a loss on my books, so I need to actually see what actually happened here. Okay, so I had plant assets here, but here's what I actually sold something to. Okay, because I already had that, right? Because it's already telling me that I have a change. Over on this other one, I actually had the loss. Remember, I have a loss on the sale of the asset. All right. So I need to look and see. Here's the first reconstruction here too. Okay, is that I had a loss on the sale of the assets. All right. So we got new. It says we got that one, the new assets by having a note payable. This is irrelevant. There's no cash in that. You see cash in that entry? There's no cash there, guys. There's no cash. It's irrelevant to my conversation right now. All right. It's relevant to my balance of my assets that I need to know in just a minute, but that's about it. All right. Item C reports that Genesis sold plant assets costing 20,000 with a 12,000 in accumulated depreciation for 2,000 cash, resulting in a loss. Net book value is 8. 20 minus 12. So I know I'm going to have a loss because I only got $2,000 for it. We take this off. That's where I got my loss from. All right. This year's depreciation expense was 24. The expense was 24. It wasn't 12. The net increase in the account was 12 because I took the 12,000 off for the asset I sold. Okay, you can't just assume that's your expense because the account went up up by 12,000 as the problem told us over here. All right, it says accumulated increase by 12. That's fine and great, but on my income statement that I have, it tells me the expense was 24. That's what I recorded there. All right. So the only cash that I received, okay, only cash I received here was $2,000. It says the purchase is a non-cash investing and financing activity. It's non-cash. I never got the money. Had nothing to do with cash. All right. All right. So long term there is a $26,000 increase from 64 to 90 on the notes payable. So we had 60 for issued notes, retired notes for 34,000. Had the gain on the retirement of notes. I need that issued notes to figure this out. It's just typical accounting stuff. I have enough information to work through the missing pieces here. So if I started, right, with 64 and I took out the 34 is what I had is a retired note. So that would give me my gain and my cash this would let me back into $18,000 in cash if they didn't give it to me. So that's how much cash I actually paid to retire the notes. So that's the cash flow from financing activities is $18,000. All right. This is the hardest part. This is the hardest one. Financing is usually the hardest one. There's no doubt. All right. Stock is pretty easy because I can do the same thing if I issued stock. I'm going to know what that is. Okay. But any kind of financing anything financing like this is the hardest piece. All right. Stock is stock. And then dividends. All right. Retained earnings, any kind of change in dividends, you'll need dividends too, right? Those are usually all given to us. All right. So now that we have this, we're going to start with net income. We got all of this stuff: net cash provided from our operating, net cash provided from our investing, net cash from financing, and it should prove. It says our total net increase in cash was $5,000 after all three sections was $5,000. So cash at the beginning of the period was 12. Add the 5 should give me 17,000 as our ending cash balance. That should title my balance sheet. That's the whole point of this whole statement is to do that right there. All right. All right. So as we use this stuff for ratios, all right, look at cash flows from operations, average total assets. I mean, that's what we're doing this for. Okay. All right. This is helpful if you want to use it in a spreadsheet. Absolutely. Yep. Use as much Excel as you possibly can. Okay. All right. Direct method is just revenues and expenses, cash in, cash out. All right. It is not a GAAP based statement. All right. It's very possible. Okay. I've had a lot of clients before where their indirect method is almost a direct method because they don't have all those things. They don't have accounts receivable. They don't have accounts payable. It's just basically cash in and cash out. All right. All right. All right, guys. That's chapter 12. I tried to slow down as much as I possibly could to give you all as much information on this as I can. Um, please email me. Please call. Please, set up a time to come by my office. I'm here every day except for Friday most of the time, and I can be available as much as possible. I'm here every morning, every afternoon. It's 4 o'clock here on Wednesday, and I'm here, doing a video for you guys. So please come by if you have questions. Don't struggle with this. This is I would say one of the hardest things we do in accounting, period. Okay. So much so that most accountants do not do this in practice because they don't get it right. And y'all know I'm honest with y'all. I didn't get a lot of these right in school either. I didn't get a lot of these right in my educational career, getting them to balance out. These are a little simplified right now for y'all. On up through in graduate school, they get a little bit more complex. And we were lucky to get them close because they would throw all kinds of stuff. We had to do a lot more calculations to arrive at them. Um, but they are. It requires you to think. You can't memorize this stuff. So this one is a little different thought process than some of the others. So please, if you have questions, If you have any issues at all, feel free to contact me. Okay. I hope everybody's doing well, and you'll have a good day.